Hello everyone, my name's Dean. Let's talk crypto. This is where you subscribe for daily Bitcoin updates and technical analysis. We track the price of Bitcoin as a proxy for the cryptocurrency markets at large. Today is January 9th, 2023, and thus far, my friends, 2023 has been awesome. Okay? 2023 has been awesome. The ever elusive cryptocurrency bull run is finally upon us. Many different technical indicators to prove as much. And we're going to go into that today, okay? We're going to go into all of that. And remember, it doesn't matter what everybody else thinks. Remember that. You have to, as a trader, as a speculator, as an investor, be confident in your reads, right? Everyone else does what everyone else does, and it doesn't matter. And it doesn't matter what they think. It doesn't matter when they think the bull market comes. It doesn't matter if they think this is a relief rally. It doesn't matter what anybody thinks. It doesn't matter what I think. At the end of the day, all that is important is what you believe and what you do with that conviction, with that belief, okay? The elusive confirmation that many people look for. Oh, this may just be a relief rally. I'm going to wait for confirmation, right? Does such a thing exist? It's different for everybody. A lot of people are not going to even look at investing until maybe we reach another all-time high, all right? Or something like that. So you have to make your own decisions. The purpose of this channel is educational, and I'm going to share with you the reasons for which I'm pretty much all in and why I think, with a high degree of probability, the bull market is here, the bear market is over, okay? MB shares, LTC, BTC is in launch. FLR going live today, layer cake soon behind it to bridge LTC, XRP, XLM, Doge, and Algo. Dash against BTC is breaking 1,800 days of consolidation. Monero against BTC is about to rip and might have a privacy coin bull run, okay? I think the bull run's here, period, right? And when the bull run's here, rising ship or rising tide lifts all ships. I think that's the expression, right? You can see this throughout the market, and we're going to prove this. It's not about what some people say, oh, this is a bull run for this, or just that. That doesn't really exist. Yes, in isolated instances, excuse me, you'll see one asset go and another asset go. But by and large, in a proper bull run, altcoins will lead the way, Bitcoin will follow, and altcoins at large, okay? You'll see altcoins go. It's no such thing as, oh, just this piece of, the altcoin market goes and everything else just stays. Like, if you look at the charts, and I'm not saying this on opinion, obviously everything is an opinion, but backtest this. Look at the charts. Look at your favorite assets. Look at the cycles. When we're in a bull run, everything goes to a certain extent, okay? To a certain extent. Operative phrase. All right, so let's look into all of this, and let's have some fun. I think crypto gets really fun around these times, and if you're listening to this, if you're watching this, you're one of the few. You're pretty much a pro. Okay, we're 630 some odd days into the bear market, and you're still paying attention. You're still paying attention. Like, that is rare. Okay, I told you guys last week that I've been watching the market every single day for the past 800 days. I don't know if I've ever done anything in succession for 800 days in my life. Okay, like, that is, like, I hear that, I say that out loud, and I hear it, and I'm like, dude, 800 plus days? Like, what's wrong with you? Like, that is obsessive. That is really, really disciplined. And I believe that's what it takes to make it, right? Not to get lucky, but to really make it in this space. You need to pay attention. You need to pay attention, okay? 800 plus days paying attention. 620 plus days of a bear market. Following every single day. Following the charts. Following the price movements. Following the price action, more importantly, right? And finally deciding, okay, there, I saw it. And what do I have on the screen right now? Okay, very important. This isn't Bitcoin, right? Although we use Bitcoin as a proxy for the cryptocurrency markets at large, what do we know about bull markets? That altcoins lead bull markets. It's an opinion, but it's an opinion based off of fact. That fact, you can backtest it, okay? The idea is that if you go into the charts, altcoins lead bull runs and Bitcoin dominance falls, okay? So you can see Bitcoin dominance here at support, about to break this support that's been holding for, I don't know how long, since May 2021, so a 600-day support. And 600 or so days is not ironically, not surprisingly, the length of our bear market. Okay? So for the length of the bear market, Bitcoin dominance has been hovering in this region. If you're watching and if you're listening now, you're not an amateur. Very unlikely that you are. But in the small chance or in the event that you are a newcomer to this space, Bitcoin dominance is essentially the measure of Bitcoin's total market cap versus or compared to the entire cryptocurrency market cap. Okay, so what percentage of Bitcoin's market cap is the entire cryptocurrency market cap made up of? Okay, and so the higher it goes, meaning the more dominant Bitcoin is in the whole cryptocurrency space, the lower it goes, and the opposite, all right? The less influential by market cap Bitcoin is in the whole cryptocurrency space. And in a bull run, what you see is a fall of Bitcoin dominance, right? Because altcoins gain against Bitcoin's market cap strength, okay? And so that's what we basically can see. We can see a large bear flag. Okay, people like to say that Bitcoin's in a bear flag. This is the bear flag. The DXY is the bear flag. Okay, but okay, that's all kind of subject to interpretation. Everybody's going to read the chart differently, and they're going to trade it accordingly. But you can see this quite clearly here on the daily time frame. A big impulse right here. Lots of consolidation. 600 days of consolidation. Likely going to be followed by a big impulse, okay? Obviously, we understand that there is such a thing as consolidation reversal channels or accumulation zones, okay? So in the event that this was going to move, then all of this would have to be accumulation, consolidation, price action, right? 2 degrees of AB basing and a pivot. Highly unlikely that it is, okay? For many reasons. We're not going to go into all of that, but that's essentially what we're looking at. And this is why I said in the beginning, when you're looking for a Bitcoin or a crypto bull market, you're going to see altcoins rally. And they're going to rally ahead of Bitcoin. Okay? And you can see that right here. Look at the charts. Look at the percent change. This percent change for any newcomers, it's calculated on a daily basis. So the trading day typically goes from the open of the market to the close of the market. Now, crypto's 24/7. I know that. But still, it's calculated on a daily basis just because that's how traditional stocks are calculated. So it goes from 7 to 7, 8 to 8, right? Depending on the season with daylight savings. I think right now it's 7 p.m. to 7 p.m. Okay? So since 7 p.m. yesterday evening Bitcoin's up 1.3%. Look at everything else except probably synthetics and Tron. Everything else here is up much more than Bitcoin. That's typical bull market behavior. Okay, without even examining the charts, you can see just by looking at the percent change. This is bullish, very bull market behavior. Bitcoin's up, but everything else, most everything is up much more than Bitcoin. Okay, very important observation. Okay, so now let's go into the actual price action of Bitcoin. So on the 4-hourly time frame, people are saying that some people are saying that this is the bull market, this is the start of the bull market, like myself, okay? Some people are saying, oh, this is an Adam and Eve double bottom, okay? That's the Adam bottom, that's the Eve bottom. Classic pattern for continuation. Others like myself are saying, well, I don't know anybody else who was saying this, but I'm saying this is 2 degrees of AB basing in a pivot that I can read quite clearly. My A wave, my B wave, that's my first degree of AB basing. My second degree of AB basing. And here's my pivot. And then here is my slow but sure leading diagonal up. Okay? So 2 degrees of AB basing, first degree, second degree, pivot. Okay? That's how I'm reading this. And zooming out on a higher time frame, I'm reading this as one contiguous accumulation reversal channel. Okay? Ever since the last fall in the bear market. Okay? I'm looking at a 600-day bear market, okay? We spent about 400 days going down and 200 days going sideways, okay? You have to accumulate the supply that you dumped on the market. So each and every time you make a high or a low, you need to have a sideways accumulation or a sideways distribution, okay? That's just how the market works. So again, 400 days down, approximately 200 days sideways. That's the bear market that we lived through. Okay? And now our task as analysts, our tasks as speculators is to properly read this sideways accumulation and see if we can't find a way to spy a reversal here. And this will literally be the bottom of the market for a reversal into this new trend. What's the new trend I'm talking about? This is the new trend. Actually, it's not a new trend. It's just a resumption of this trend. This is the old trend, all right? From March of 2020, it went up 5 waves. After March of 21, so it went up for a year. March of 21, it came down in 3 waves. Went sideways for 200 days, like I just said. This would be the resumption of this trend. I hope everybody understands. Like, this has been. Now let's go to our master chart. Okay, because I want to drive this home. It's not about my being right. It's just about, I think, consistency in your analysis. Not everybody understands this because, I mean, we live in a world where people expect instant gratification because you get instant gratification from your devices. You want to watch something, you can stream it, you can download it. You have, 5G connections, you have Wi-Fi that can download movies so quickly. You don't really have to wait for anything these days. You want something from Amazon, it comes to you overnight. Everything's sort of so fast, yeah? So when people click on my videos and I say, I believe that the bear market is coming to an end, and, I said this 60 days ago, right? Because technically, We bottomed 60 days ago. Can you guys believe that? 60 days ago, we bottomed. Okay, let me show you. Let's go on the daily time frame. Okay? Look at this. People find this hard to believe, but it's hard to really understand any of this when you don't have the mindset of, okay, my overall high time frame analysis has not yet been invalidated. So this can still be true. If you're just, well, he said it was going to go up and it didn't go up. 60 days ago from today was November 9th, okay? That was the FTX kind of downfall day, where the markets did react to that. The crypto markets did react to that. As you can see on this chart, that was 61 days ago. That was pretty much the bottom at 15,600, okay? When we had made that bottom, we came up for that initial break of structure. I said it's very likely that that was it, okay? And then as we matriculated kind of sideways and started doing what looked to me like accumulation, a consolidation, reversal of this drawdown, I said that I'm preparing, right? Accumulation, consolidation of this drawdown right here. I said I'm preparing for a move up and out of this range. And so that was 60 days ago. So let's say if 60 days ago you had not listened to me, but thought the same and prepared as if that was the bottom of the market, you would have gone sideways quite a bit, but you would have been quite all right, right? In terms of keeping a position in profit, okay? But 60 days is a long time, especially in this day and age. How many people are keeping positions open for 60 days, much less 600? How many people are consistently watching the market for 60 days? How many people are able to read this price action and say, oh yeah, the overall analysis is not yet been invalidated and it's all the same, it's all good. I'm going to wait for a move back up and out of this, and then eventually a move back up and out of this larger consolidation reversal channel. Okay, so that was the thesis. But back to my my original reason for coming to this chart right here. So this is the weekly time frame. I learned, one of the first things you learn in Elliott wave analysis is you go 5 waves up. Okay, I didn't draw that really well. Something like this, something like that, right? You go 5 waves up and 3 waves down, okay? And those 3 waves typically retrace to between 382 and 618 of the 5-wave sequence, okay? So I break open a chart of Bitcoin on the high time frame, and I read these 5 waves, and I read these 3 waves, right? And I'm like, okay, so anywhere between 382 and 618, I'm preparing for some sort of reversal, some sort of support level, okay? I first saw it here, and I'm like, oh, maybe that's it. But that proved not to be the case. And at that time, to be honest with you, I wasn't very well versed in consolidation reversal channels, 2 degrees of AB basing, and a pivot. This is something I developed over time. Over the course of, the past 600 days, I started developing this, right? This thesis and this theory, with the help and obviously the foundational knowledge put forth by Ralph Nelson Elliott. And then also I didn't really have a good understanding of double zigzags, all that stuff. Like, there's a lot of stuff I didn't know when I first saw this. Okay, so it was hard to read as it was happening. But that's fine. And then this happened, and I said, okay, not only have we come down to a level between 0.5 and 618, which you typically expect these wave 2 corrections, this would be a minor wave 2 correction, to find support, But if you channel this, you're at the base of the channel and you're performing a little bit of a throw under. Okay? Lots of reasons. From an Elliott wave theory vantage, if you look at this, that you could say, well, it's likely that this is a place of support. This is a bottom. Okay? Again, very few people have this understanding. Very few people have this view. Everybody's got a different idea. A lot of people are believe it or not, a lot of people, they're taking money for courses. They got tons of following on YouTube channels. They're legitimately looking at these kinds of charts. High time frame, no log scale, on the arithmetic scale. And they're doing analysis like this. One such person, I'm just going to name the name, right? It is what it is. Garrett Soloway, very nice guy. Seems like a nice guy. All over the television, all over, other influencers' YouTube channels. But he literally and seriously, dead ass, looks at charts like this. High time frame, no log scale, and does analysis like this and says, well, I think it's gonna go. He's actually saying now, he's kind of changed his tune, that it's gonna go up in the interim, but he still sees it come down to the 9,000. And that's okay. Everybody's entitled to their own opinions. But this is why it's so important for you to do your own homework. It's so important for you to make up your own mind. Make sense of what you're seeing. Don't follow anybody. Don't listen to anybody and say, well, that person said it, so I'm going to do it. You can listen to people for your own edification, for your own understanding, for your own to be inspired by other people. But if you can't look at this chart on a high time frame, no log scale, and come to the conclusion that something's wrong, then that's on you. That's not Garrett Soloway's fault. That's on you. So I continue to say that this channel is for educational purposes mostly. I'm sharing my analysis. Doesn't mean my analysis is correct. But thus far, my entire thesis has been this trend is a wave one or some sort of Elliott wave impulse. This is an intra-wave correction. This is a consolidation reversal of that intra-wave correction. And this trend must continue. The larger trend must continue. And I believe it to be starting finally. Okay? And my target, once again, and I know this is unpopular, my target for this trend, this next trend, a wave 3, is approximately $2 million. Between $1 and $4 million. That represents the 1618 to 2 Fibonacci extensions of wave 1 retracement of wave 2. Just like any regular Elliott wave. Okay? And the time frame for that is late February, mid-March, late March, between February and March of 2023. So approximately 3 months. 3 months time. It's possible in 3 months time we put in a massive increase, a 12,000% increase. And people are like, that's crazy. That's a look, back test it. People say all kinds of things. They've never read a chart in their lives. If you look at Bitcoin's history, we've done that before, okay? Because it's been an asset that's been openly traded for 10 to 12 years, and we've had 12,000% increases in the bull market, okay? So that's not something that we've never seen before. But now, why would you say that in 3 months' time we can do that 12,000%, whereas it took us a whole year from March 2020 to March 2021 to put in wave 1? Well, remember, Elliott wave theory also tells us wave 3 is typically the most impulsive and the longest, typically the longest and most impulsive of Elliott waves. So just because wave 1 took a year, it doesn't mean wave 3 has to take a year. Wave 3 typically is even faster and longer, okay, than wave 1. So that's all within the realm of possibility, just technically speaking, okay? Because when we talk about the bull run, people have to remember, just because the bear market took 600 plus days, and that's the drawdown, right? Combined with the sideways accumulation, okay? I would consider this the bear market. You could consider all of this the bear market, though. Since March of 2021, I'm just considering drawdown plus the sideways accumulation, okay? Because I know the term gets thrown around, but here we're technicians. We're going to be more precise in our language. So, just because all of this took 600 days, a lot of people, a lot of casual investors and, people on the fringes think, oh, well, you're going to at least take about 600 days just to put in a bull market. That bull market, like, even people that have, huge Bitcoin or huge followings on YouTube and that have been into crypto for years and years and years say the same things. That's why you got to do your own research. Just because somebody's been in crypto for a long time doesn't mean they know shit about trading. Okay, a lot of people just bought and held long enough to make a profit. That's it. They're not trading wizards. They don't know anything about how to read a chart. And if they do, they've never necessarily been successful on the basis of their being able to read a chart and a pattern. Okay? Don't think just because somebody has money in this space that the money was made because they were able to trade up, okay, on a high time frame or a small time frame. It's very rare. Actually, it's very rare. Okay? But yeah, that's the idea and that's the rationale for why my time frame for this next bull market is not long. And this brings me to my next point. Okay? Most people are going to miss out on this. Okay, now that the bull market, I believe, is finally here, okay, this sideways accumulation has played out, and we're finally going to resume this trend, right? Most people are going to miss out. If indeed this next bull market only takes 70 to 90 days, approximately, right, to go, do you think that people who don't pay attention, like you, who don't watch, YouTube videos of people talking about chart analysis for an hour on a live stream, people who haven't been looking at the price and the price action for the past 600 days, that's most people, okay? You're in the minority. We're in the minority. Do you think they're going to all of a sudden get in just on a whim on something that for the past 600-700 days has been down and sideways, and for the past 200 days, 100 days, people have been saying it's rat poison, it is the bane of all existence, it's a Ponzi, it's a fraud, it's a scam. No, they're not going to touch it. They're going to wait until something like this happens. We probably meet this resistance here, and we get into six figures. Then they're going to start maybe considering. And then even then they might be scared. Do you understand? It always takes conviction. There's always risk associated. But I believe, as a result, most people are going to miss this. Most people outside of the space are going to miss it. Most people inside of the space may even miss it because they're so married to the idea that what's going on in the macro dictates everything. And it's impossible, given the economy, given the news about our space, that the price can go up. Okay? So again, always comes back to, what are you doing? Doesn't matter what they do. Doesn't matter what they think. I have like 500 some followers. I don't care. I personally most people don't, I don't believe most people know how to do technical analysis on a high or small time frame. Okay, there's some, but most people don't. It's hard for me to watch. And it's funny because I listened and learned to a lot of basics from some of these people. But it doesn't matter whether they know what they're talking about or I know what I'm talking about or neither. It always matters what you do. What are you going to do with the information that you have? Okay? So empower yourselves, learn what you can, practice good risk management, because no matter how good and how elegant your analysis is, you can always be wrong. And good risk management says, I'm not going to, give up my family life savings on the off chance that I make a mistake. Everybody makes mistakes, right? So it's tricky, but there you have it. That's basically what you're faced with right now. Okay, it looks like a market that has bottomed, that is going or has gone into positive impulsive price action. Okay. I showed on the thumbnail Cardano because it was such a clear example of that positive impulsive price action. Yeah. And we're going to go to Cardano in a second here. Where is it? There. How beautiful is this? Okay. This is what you learn when you start trading, when you start doing technical analysis. Okay. This was a support level that was lost, okay? You do a consolidation reversal or absorption of this supply, and now, having absorbed that supply, exhausted all the selling, you rally back up, and you form a higher high, okay? You make a higher high than that support level that you lost. That's a reclamation of major support. You retest that support or that resistance as support, okay, right? Because it became resistance when you fell under it. Now you broke the resistance, claim it as support, and that's your bull market start for this particular asset, Cardano. That story can be told throughout the cryptocurrency market, okay? So it's up to you to be able to read these charts and react accordingly. Okay, are you going to look for something else? This is a 4-hourly time frame. That's a big fucking deal right here. Look at this. That is a legit move right here. It took 60 days. It took 60 days to play out, but once you see the totality of this move right here, if you still think that this isn't a bull market, I don't know what to say. Okay? Because that is not something that happens in a bear market. You do not reclaim important support that was lost and make it new support once again in a move up. Okay? And yes, I can hear already people saying, well, there are bear market rallies. Well, to answer that question, you're going to have to look at the larger scope of analysis, okay? You're going to have to really zoom out. And again, you can't really fake this. You can't really get around this. You kind of have to understand price action, okay? You have to understand that this is very likely an impulsive move up, okay? And this is very likely a corrective move down, okay, of this impulsive move up. And you have to also understand that the SPY ratio is mathematical support of this move down. And so it's very likely for you, if you can read price action, if you can read charts, if you're chart literate, that even though you've been going down, you've reached a mathematical support, that 0618 at 28.8 cents, you reached a mathematical support of this uptrend, And so it's very likely that this uptrend continues at this point in time. Okay, you should be able to do that with any asset that has enough price action, right? Obviously, not all the assets that we work with have all of this price history, so you can't really do that for everything. But Cardano's been with us, right, trading since 2020, late 2020. So we're fortunate enough to be able to tell that story here, and that is a bullish story. That is a perfect entry, if you ask me. I mean, that's literally the perfect entry. You're reducing risk, not financial advice, but you're reducing risk, and you're kind of proving it to yourself right here with that move. You know, I'm already into this trade, and you know, I got in here and then got stopped out, and I got back in here. Okay, it's just I'm reading it now, and it's really simple and easy and like obvious. But as it's forming, it's harder to read, right? You don't know what's going to happen or how it's going to happen. So, there's no use kicking yourself. I'm speaking to myself for misreading it and thinking, oh, this was it right here, and whatever happened here, you were going to get that dip here. No, it's fine. That is the precariousness and the randomness or seeming randomness of price action. There's just so many different permutations and combinations. NB says, looks like a bigger bump and run reversal than 2018-19 segment transition. By April, it sprang out. Yeah. I mean, this is huge. This is huge, and I mean, there's so many reasons why this bull run is potentially going to be one of the largest, if not the largest, bull run in cryptocurrency history. And it's going to be so fast. Guaranteed. It's going to be so fast, most people are going to miss it. It's going to be so fast, most people are going to miss it. If you're here, if you're listening and you're watching, you probably already built positions, or you're probably building positions. Congratulations. Most people are not going to get the chance to do that. Okay? Once we actually really start running, we haven't even started yet. Bitcoin has gone up like 1% or 2%. It hasn't even started running yet. Once it starts running, it'll be more clear what this is and how intense it is. This is a big deal. Okay? Let's look at our main indicator. The US dollar currency index. Okay? What did it do? So, ever since Friday, it's been going down. And this is something else we've been saying on the channel quite consistently, right? We've been reading the DXY and saying that it's likely breaking down, and that it would break down in a spectacular fashion and probably target these areas down here between 90 and 90, I think 90, 96 to 98, and probably even down here to 90, upper 80s, something like that. But there's a big breakdown looming for the DXY, okay? And that's important because we all know that the DXY is the underlying asset for Bitcoin. Most risk-on assets, when the DXY goes down, Bitcoin goes up, risk-on assets go up, all that stuff, okay? So we counted here a 333, okay? A complex flat correction that ended over here. We got a big rejection. That big rejection was also representative of a resistance level that was the support level of this massive head and shoulders on the higher time frame. You came down impulsively, and you're still going down, okay? All that is something that we've been talking about for months. And this is also a great point, an important point, and goes back to what I've been talking about in this episode. sometimes your analyses on the higher time frames, by definition, take longer to play out. Okay? But where do you make the real money? Where do you make like real gains in trading? It's on the high time frames. Okay? You could trade the small time frames successfully, but I mean it's nothing compared to building a position and giving it months to mature, and then reaping the benefits of those positions or that position after many months of a trend playing out. Like there's nothing like that, right? And this is why my strategy this entire time has been read the higher time frames, try and play the higher time frames, position yourself for the higher time frame, accumulate, right, around these areas of accumulation, and wait for those larger time frame moves to play out. Okay? So judging by what the DXY is doing, that's exactly what's happening, right? That big run that we're looking at in the next few months is likely to happen mostly because the DXY is breaking down, the underlying assets breaking down. Where's all the money going to come from to flood into the market? It's not because people are going to get wise or some big whale that you hate or some, conspiracy theory saying, "Oh yeah, they've been waiting for this." No, they're not that smart. Most hedge funds, most traders, most companies are not that smart. They don't know when to buy. They're just like you and I. They kind of guess, make their best guess, right? They're buying a little bit here, buying a little bit there, getting stopped out here, getting stopped out there. Okay? But a lot of them don't even have to know how to read charts like that. Trust me, because a lot of their lead chart analysts are the ones writing these FTX or FFT, the street articles, or like these Bloomberg articles, and they don't know shit about charts. They read a pattern here or there, but, they're all over the place. They're all over the place. So again, trust yourselves. Trust yourselves. You're the authorities. Because they don't know anything more than you. And you probably know more than them, to be honest. Just because somebody pays them a wage to speculate, that doesn't make them any better than you, right? So, my point was, that's where the money is going to come from. Okay, people ask, okay, if we go up to $2 million per Bitcoin in 3 months' time, then where's all that money going to come from? It's going to come from the dollar losing value. Simple. Okay? That's where the money's going to come from. The dollar's going to lose value. Let's go back on the 4-hourly time frame. Again, if the dollar loses value, then by definition, every single last asset that you see in cryptocurrency that is denominated by the US dollar, right? Look at these charts. We read all of these charts against the US dollar or a stable coin pegged against the US dollar, right? So Tron against USDT, Tron against USD, Bitcoin against USD, Ethereum against USD or USDT, right? If the value of USD or the USDT goes down, by definition, the value of Tron, Ethereum, XRP, whatever, goes up. That's where the money is going to come from in the next few months. So, yeah. That's pretty much it. Guys, these are clean impulses. Clean and clear. I don't know what to tell you. If you can't see it, I can't help you. I mean, ever since 2023 kicked off, it's just been impulsive. Clean impulses. As you can see, if you have eyes to see it. But again, you have to have eyes to see it. Not everybody can read price action. But here you can see, since the beginning of 2023, clean impulses to the upside. It's just, impulse, intra-wave consolidation, impulse, intra-wave consolidation, impulse, intra-wave consolidation. Expected to continue for 2 to 3 months. Whoops. Whatever. Here. This has been a bit corrective, but the impulse starts over here, okay? I'm gonna erase one of these stray. I hate leaving dirty charts. one of these I left. Anyway, let's continue. But that's pretty much it, guys. I mean, this is the best example, Cardano. And, what has everybody been saying about Cardano? Oh, because Cardano had been going down for, what? For how many days? Let's see. Hundreds of days. Cardano had been going out for 486 days. Yeah. Most people, because, again, the culture is such that whatever happened yesterday is what's happening. And they've completely forgotten what happened in 2020. And that impulse, right? That impulse actually was much greater than the retracement. But no, nobody remembers that. Everybody's myopic in their analysis. They're on the 5-minute chart. You go on Frankie Candle's channel, looking at the 5-minute, the 15-minute, the 23-minute, just bullshit. Like, nobody has a high time frame analysis, because you know what? If you have high time frame analysis, what are you going to talk about every day? You can talk about the small time frame analysis, but you're not going to tell your watchers, your readers, your listeners to take action on that, because nothing's changed. Because the overall high time frame thesis hasn't changed. But one of the ways to build engagement on YouTube, on Twitch, or whatever with technical analysis is to do small time frame trading. So that's why a lot of these channels engage in small time frame analysis. But to their, I guess the issue with that for them, nothing wrong with them doing that, right? People can do what they want. They can listen to what they want. The issue is, you do that enough, it's hard for you to zoom out and really appreciate the high time frame and plan for the high time frames. Do you understand? So if you're so used to looking at the 5, 15-minute, 23-minute, or whatever, intraday time frame you're looking at and trading that and forming an opinion about the markets based off of that, you can't see the forest through the trees. And it doesn't make sense to you why you would buy Cardano at 40 cents because it's been going down for 486 days. But if you look, you can see here clearly impulsive, clearly retracement, intra-wave retracement, clearly consolidation, right? Clearly some sort of accumulation of this drawdown. And clearly, when you do get a move, you're going to resume this trend. That's it. It's that simple. Nothing more to say. But for 486 days, you have to spend time monitoring the situation, building positions, and that's it. So that's the whole idea, guys. You have to have perspective, but you can't just have perspective and say it's gonna go up once more, like Pollyanishly. No, it's all about your technical analysis. You have to be able to read the charts, and with a high degree of probability, have good theses for why it's going to go up and how it's going to go up, right? That's why you build your skills. And with your skills, you can very confidently invest and with high probability ensure high levels of returns on these investments. That's the whole point. But it has nothing to do with other people, what other people say, because most people are going to say it's trash. It's a bad investment. Dump it. And that's actually when you know you're onto something. Most people are going to say crypto's a terrible investment for 2023. It couldn't be any, according to me, it couldn't be any different. It couldn't be much more different, right? If you know how to read charts on a high time frame, that's literally the last thing I would say. But that's why not everybody makes it. That's why it's not easy, right? Yeah. If this new trend took a lot longer than 3 months, 4 months, if it took a year, maybe some people would be able to get in on it. But I honestly don't think it will. And I honestly think that most people are going to miss it. Most people are going to miss it. and as it's going up, they're still going to tell you, be careful. It's very dangerous. When it just moves like any other market moves, according to basic technical analysis. Akanksha says, "Hi, how are you doing?" I'm doing very well, Akanksha. Thanks for asking. Bitcoin on a bull trap. I beg to differ, Akanksha. Beg to differ. Beg to differ for the reasons I stated, or I've stated. Yeah, this is exactly what most people are going to say. But yeah, most people will miss this. And there's never going to be a time or a place where it's going to be safe for those people to get in, right? Most people are not going to feel safe. It doesn't matter if it goes to a certain price level, because it's not about price. It's about price action, right? As you guys know. But if you can't read the charts, you're never going to feel like you're in a position where, okay, you can possibly take a trade and not worry about it making a lower low, right? So again, you always have to just depend on your sort of fall back on your own reads. Depend on your analysis, right? So yeah, that's pretty much it. I do expect that this next move, once it actually gets going, it's still kind of taking its time, making a slow move, slow grind up, okay? When it comes, I wouldn't be surprised if we targeted all the way up here at 25K. All right? All the way up here at 25K. I know it seems like a lot, but it's not really. That's just a 45% move from where we're at right now. So Akanksha says, I see it in range until 18K, then dropping to 13K. What would that look like? That look weird. Let's see. 18K would be around here. And then 14K, lower low. Okay, so something like this. Something like this. Again, is it possible? Everything's possible. Is it probable? I don't think so. But everything's possible. So Akanksha is saying that this is one massive B wave, if anything. Is it possible? Everything's possible. Is it probable? I don't think so. But we'll see. Okay? And just judging by excuse me, what the DXY is doing and how it's played out, I don't think that's likely. And I guess again, it's not just Bitcoin, but the rest of the market, right? Looking at something, I think ADA's the cleanest it's the cleanest analysis, or it's the cleanest looking chart. It's the easiest to read chart right here, right now. Okay? This is the easiest to read chart. What will this do? What's it likely to do? I already explained it, but reclaiming that level right here, that previous resistance, right, as support, means that it's very likely to continue to the upside. Very, very likely to continue to the upside. Okay? Given that, if this is going to go up, right, Cardano, a top 10, top 20 coin, whatever, it's likely Bitcoin will follow suit. Remember, because if it's a bull market, altcoins are leading the charge, not Bitcoin. So if you want to know what's happening, look at the altcoins, right? Historically speaking, right? That's not an opinion based off of nothing. Again, we've back-tested it. In every single bull market, altcoins lead the charge. That's why we call them alt seasons, all right? Conscious is creating that perfect bear trap too. Yeah, it's not a trap. I mean, people like to say trap this, trap that. That's just price action. I mean, I like to look at it. I understand the terminology. I understand how the term's used and why people use the term. Bull trap, bear trap. Fake out. I don't like to use that because there's nothing fake about a B wave. It just is. a counter trend, right? Every trend has a counter trend. Every positive has a negative. Every alpha has a beta. For me as an analyst, as a technician, I just like to look at it like that, like a natural phenomenon. So yeah, that's what I'm doing. That's why I'm almost all in. This is what I think is going on. Those are the reasons. All right. Most importantly, those are the reasons. Make up your own minds. Do your own research. Use this as inspiration, if you will. But always practice good risk management, guys. And I wish you the best of luck. If you're bullish, I hope it goes up. If you're bearish, I hope it goes down. All right. Take care, and I will see you tomorrow.